if you're trading support and resistance, and this is what you get, this is a losing trade. We all get losing trades. But if you're getting stopped out and then price going your way, then this video is for you. We are going to look at how to spot high quality support and resistance so that you can trade off of them. If you're new to the channel, subscribe. I have a free mentorship program teaching this strategy. Link will be in the description. Let's jump into the video. So, support and resistance. Now, in order for you to be able to successfully trade support and resistance, you need to have a market bias. You need to be able to spot powerful support and resistance levels where you expect price to reverse off of them based off of price action. You are not just looking at the high or the low. You know based off of price action previously that there is a high probability we can have a reversal here. The most reliable system that I use to look for powerful support and resistance is called the failed breakout system. And this is where I identify my weekly bias. Now, this is the process. Monday will always set the high and the low of the week. And then now from there, once you have the high and the low, I am looking for failed breakouts on Tuesday and Wednesday. And this is a trade that I have taken using this system, and we shall look at how we arrive there. But we continue. So, when I'm looking at a failed breakout, we have 3 days of trading. We have the first day, which is the signal day, and that is the failed breakout. Now, if I have that failed breakout, the next day will be day 2 and day 3 will be the day after. Now, if I have a failed breakout at the high of the week, I can sell on day 2 and day 3. And if I have a low of the week breakout, and if I have a low of the week failed breakout, then I can buy on day 2 and day 3. So, what exactly are we looking at when we say we are looking for a failed breakout? So, here's the thing. If you look at this price action pattern, in fact, let's look at the real thing here. You can see that on Monday set the high and the low of the week. And then on Tuesday, we were inside. So we never triggered the high and the low, which means it was not very interesting for me. And then on this day, on Wednesday, price broke out. So at 9:45, we can zoom in and see the breakout. This candle broke out. So once the candle broke out and then closed back inside, so there will be scenarios where we have a price breaking out like that, and then this close here will be outside of the high and the low. That is not something that I want to see. I want to see breakout close inside. That is what we call a failed breakout. And you can see I have annotated there my failed breakout. So if I have a failed breakout at the high of the week, it means sell on day 2 and day 3. So this is now day 2 for me. Day 2. And yeah, that is now what I call the failed breakout. Now, you can also have the failed breakout at the low. And using this system, you won't always be getting the setup that you want. You will be getting a reliable way of determining where the market is headed for the week. That is why I call it the weekly bias. You have a bias. Now we have the bias of the week. Now, in order for us to avoid trade setups that look like this, then we need to have a defined system of accuracy. Now, accuracy is very simple. I just have a specific trading window where I come to look for setups. That way, I eliminate a lot of possibilities of the market going wrong. So in Asia, I come to the screen from 8 to 11 p.m. New York time. London is 2 to 5 and New York is 8 to 11. All this is New York time. Now, once I have my trading window in place, I am looking for now my high quality support and resistance areas, which is number 1, the high and the low of the day. If I don't see price coming back to the high or the low, I will not trade that day. And then we have the previous day's high and low, and then we have the high of the week. So how does this look like in real life? So let's remove all this and then look at, okay, let's break this down. Right now we are in the Asian session. This is gold. So the first step is my timing window. So I have a timing window from 20 to 23, 8 to 11 p.m. New York time. Now, once we have the timing window set in place, I am looking for, so remember this is the beginning of the window at 20. I'm removing the line so that we can see the candles themselves. This is the high of the day prior to the window opening at 20. What happens at 20? Price pins that high. Now, this is one thing also we need to talk about. So we have first hour. So even if I look at the markets for 3 hours, the first hour sets high and low of session. So we don't trade in the first hour. We just adjust the high and the low accordingly. And that is what we do here. So if we look at 20 to 2045, this is where we have our high and our low of the session. We extend that high to that level. Now we have an accurate high and low of the day. And then now, second or third hour, we look for stop hands. Now, I call them stop hands, but basically they are just failed breakouts at the high of the week. So this is how a failed breakout looks like, just like this. It's a situation where we have a breakout and then we fail to continue with the breakout and come back into that level very quickly. So you can see the breakout and then we come back into that level. So the reason why we wait for the breakout is for this reason. If you are trading, say for example, at the high of the day, if you don't wait for the timing window, so the market open, and then you don't wait for the stop hand, you will get in early. And then you will put stops above the high. Now, remember, 90% of traders lose money. So if you are among the 90% of traders who lose money, this is where you put your stops. And then 10% of traders, we take the stops, we put our entries where your stops are, or we wait for the market to sweep your stops first. So that when we enter, so if I enter here, I put my stops above here, there's a high likelihood that price will not continue to this level because there is no more liquidity. It will have to continue in our direction. So that is the whole point of trading from the powerful support and resistance levels. So I am looking for a breakout and then a quick reversal at the high of the day. Once I know my signal, my weekly thesis, I know there's a high probability that we will continue selling today. So once I have my breakout, break out and then the candle comes back in, I am willing to enter at that level, put my stops a few pips above that high, and then I will target the low of the day and also the low of the previous day, like that. And the rest you just let the market dictate. Today we have increased our odds of success by having a weekly bias, understanding the levels of importance, and then trading at a specific time, and then lastly waiting for stop hands. If you follow this process, in the long run, you are going to make money because the odds are in your favor if you compare yourself to the average trader who loses money. Anyway, if you got value from today's video, subscribe and I will see you in the next video.